sometimes we know what unsustainable definitely looks like. And it's not much fun sort of backing away from disaster as opposed to, walking towards something which is appealing and understandable, but actually backing away from disaster is maybe also required in some ways as well.
Welcome to the New Enlightenment podcast from Adam Smith's Panmure House. I'm your host, Adam Dixon. Today I'm joined by Professor Jan Bebbington. Jan is the Rubin Chair in Sustainability in Business and Director of the Pentland Center at Lancaster University Management School. Jan's research focuses on the intersection of sustainable development and organizational operations. As an accounting scholar, she focuses on the use of accounting technologies to create organizational control, as well as reporting activities that might discharge accountability relationships. Her work includes a focus on the Sustainable Development Goals, how reporting norms emerge, and carbon accounting and accountability. Jan, welcome to the New Enlightenment.
Thank you, Adam. I'm absolutely delighted to be here to have the conversation.
Thank you so much for coming. So I'd like to start by asking you about your experience with sustainability accounting and environmental management. How has this shaped your career, and how have you been part of shaping sustainability accounting and environmental management? So a bit of a biographical question to start with.
Well, if you'd said to me, even 40 years ago that I'd be doing this, I would have never believed you for an instant. So in that respect, it's a lot of happenstance and a lot of coincidences, but maybe they're brewing towards it since the outset. So I think it's probably worth saying that I'm first in family to university. I came off a family farm in mid-Canterbury in Aotearoa, New Zealand, and the only way that I was going to get off the farm, if it wasn't to marry a farmer, which I wasn't so keen on, was to do something technical at university. And I could do accounting. So in that respect, I thought, well, I'll be an accountant, because my mum and dad were quite conservative, but they thought that was jobs and good times, jobs and bad times. So they thought that was a great idea. So I did an undergraduate accounting degree at University of Canterbury, and it was okay. I then went and worked for KPMG, and again that was okay, but it didn't really fit for me, I think. And I was doing audit, which I loved, and I use those skills to the day. So KPMG is certainly, credit to them for teaching me some really good systems thinking skills. And I also did tax consulting as well, which I found a bit distressing, because people would pay us more in fees than they would pay in tax. And I realized that maybe culturally I didn't fit, because I think tax is a privilege, and the purpose of tax is to give us the services that we like around us, which
the price of civilization.
Exactly. And I think some of those Enlightenment thinkers were struggling with that whole question of, how much tax do you pay, how much freedom, how much are we in it collectively? And I'm definitely on the collective end. Good. So I went back to university and did a master's degree part-time while working full-time, and completely by accident there was a visitor to my university, Professor Rob Gray, who sadly has passed away a couple of years ago. He was at that stage just beginning to found environmental accounting. So social accounting already existed, and he was a social accountant, and environmental accounting was just being born. And I had no idea either of those things existed, because I'd always thought of accounting as a technical activity, as will many of our listeners, and it is indeed a technical activity. So it's figuring out how much tax to pay, how to procure things appropriately. Are you paying the right price? Are people getting paid on time? All of those sorts of things are accounting. But accounting is also a social thing as well. And so, if you like, how you account for things has social impacts. And so the social accountants really kind of emerged in the 1970s. So I caught up with them sort of 20 years later. And then from social, they said, well, also accounting has environmental implications. So if you never account for your environmental externalities, you won't know they're there, and you won't do anything about them. So I was very lucky to sort of arrive at the start of this field, and have been in the field since the start. And some of more junior colleagues go, I can't believe you know so much of the field. Well, we used to wait for a paper to come out and go, there's a new environmental accounting paper, let's read it. Whereas now, if you start now, there's like hundreds of papers every
Yeah.
day. And so in that respect, it's a harder field to navigate for all of us. But being there from the beginning meant that I understood why we set it up, why it had that accounting as a social and ecological framing device and a practice. But then also, for the first 4 years of my career, I researched absence. Why weren't things happening? Whereas now we're researching just so much stuff, a plethora of things that you can look at, what organizations are doing, what governments are doing, what regulators are doing. So in that time from 1990 until now, utterly transformational. That being said, I'm still frustrated. There's more we should be doing.
Right.
But I think sometimes it's worth looking back and going, okay, we've come a long way. But actually, we've got a lot further to go as well.
Right. So it's interesting you say, I mean, my own experience, I've studied a bit of accounting in graduate school, and I did a master's degree in France, and I ended up had to take an accounting course. And this was before the French, or it was right when they were switching to kind of IFRS standards. So I was taught the existing French standards, and then we had to learn the IFRS standards. I thought it was all very complicated. And that was my kind of technical experience into accounting, but it was interesting to see the national variation. And then when I did my doctorate, I started reading critical accounting scholarship, and it was a new field for me to I mean, I haven't written in that field per se. I mean, I've dabbled in some of that, but having that experience of learning accounting for the first time in the French context at the kind of cusp of a internationalization of accounting made the reading of the critical accounting scholarship make sense, because you start to realize, oh, accounting isn't just a balance sheet with some numbers. The choices and how we define what we're actually accounting for, and some of the techniques around that, they're contingent, they're historically kind of and socially constructed. There's lots of variation. I mean, now we live in a world where there's much more international standardization. But I think even in that international standardization, we forget that there's still a significant amount of social construction and what we think of as accounting and what should be accounted for. And so, that your story kind of resonates with me, or at least makes sense for me as someone who's not an accountant, and how important it is, because what we account for determines, or at least influences, the decisions we make. So can you say then, in that respect, what is then environmental accounting, right? So what is sustainability accounting? I mean, sustainability is this big term. What do we exactly mean by that? Or where have we come from, and where are we now? And then, towards the end of our discussion, we'll talk about where we're going. But I think for now, what is it exactly?
The social accounting movement was dealing with what we would now call sustainable development, but at that time we didn't, because the Brundtland Report, which is, if you like, the seminal big international policy piece, was published in 1987. And so in the early 1990s, it hadn't really made its way and translated through into academia, into accounting. So the social accountants were always interested in employees. How were they well paid? Was there collective bargaining? Was there unionisation? They were also really interested in what happened at various locations to local communities, particularly vulnerable and local communities, with regard to organisational behaviour. So that, if you like, got attached to environment, and then it's weaved its way through into sustainability accounting as well. So all of those social sustainable development goals about decent work, about thriving communities, that's where the social accountants rest, is trying to understand and unpick that. Then when we realised there was an ecology, and the ecology was being stressed enormously, then environmental accounting came along. And that, if you like, earlier on you talked about accounting for control and accounting for accountability. So on the control side, it went into things like budgeting. Quite often waste disposal costs were hidden away as an overhead that the whole organisation paid for, rather than being allocated to the part of a factory where that pollution came from. And if it did, then people go, oh, I'm producing that, I can stop that. And so
Right.
in that respect, there's a lot of those kind of activities of tracking and inside the organization. And in there, because we'll come back to win-lose and win-win and all of those sorts of things, there's lots of opportunities, particularly in the early days, for people to save money and to make better environmental outcomes. We may be coming to the limits of that more recently, but at that stage, that was really the case. Then there's the second big function of accounting, which is sort of accounting and finance, which is how do you decide what you're going to do? So which projects will you pursue? How much money do you need to spend in order to get the benefit from a project? And here, for example, oil and gas exploration is a really good example of that kind of project work about how much oil and gas is it going to be? Can I get it out of the ground in a safe manner from the social perspective, but then also environmentally, what happens when it's out? If I combust it, well, then we're into a climate change conversation, etc. So if there are limits in how much CO2 can be emitted, then you might have something that you thought was valuable because it's got a whole lot of oil and gas, but now maybe you can only use half of it, in which case its whole valuation will change. And then if you're borrowing money to do it, all of those trade-offs. So the finance aspect, which is very close to accounting, but slightly different discipline, is in there as well. And then the third one is that as people worry about what organizations are doing, and so they can maybe see through media how the products they're buying are connected maybe to deforestation somewhere else in the world, or they're looking at tins of tuna and think dolphins, I like dolphins, what's going on here? Then if you like that sort of whole corporate accountability and the provision of information to significant others, to the financial stakeholders, but to a bunch of other stakeholders to become important. When you're thinking about providing information to stakeholders, then you've got the financial, you've got the non-financial, and this is where all the non-financial reporting comes from. So non-financial reporting was always around, but it was a tiny bit of a total. It's now getting larger, and it's now actually really significant. It's mandated in many places. And so if you like, we're now looking at both financial and non-financial information coming together. And I think it was actually one of the past presidents of the IFRS, which is the standard setting bodies for accounting across the world. He said non-financial reporting data is just pre-financial, and I thought that was a pretty smart observation. Is that at the moment it's non-financial, but say it's an environmental pollution effect or whatever, eventually that's going to become financial, because you don't, as a company or any organization, get to sit around and keep on creating environmental harm without something coming of it eventually. Now that lag time might be too long, but non-financial gives you a clue to future financial, and I think that's also now kind of in the minds of accountants.
So on the non-financial, so I think some critics of non-financial accounting or would say that, well, with financial accounting, we see what it is, we know what it is. It's simple. It's profit and loss. Non-financial accounting, there's always a politics there, in that if we think of accounting as socially constructed and society is messy, it's full of politics, and there's always that question, well, who gets to decide what it is that we're accounting for as a non-financial material component of a business or a government for that matter. Now, certain things like, as you mentioned, CO2, that's, CO2 is a chemical gas. We can measure it in different ways. You can see it in industrial processes. It's quite simple. There's other aspects, and I think for a lot of environmental pollution, there's things that we can measure in a way that you can define the externality, you can define the cost. But once you get into the social realm, which is, there's always an intersection with the environment and the like, it becomes a bit more messy in terms of what we, and again, there's the question of who is the we, determine to be something that should be accounted for. And I'm curious, in the context of, and we'll come to the Sustainable Development Goals, but just in the broader sense of defining what we should be looking at from a social accounting or even an environmental accounting perspective, who decides, and how do you manage the politics of that, and how do you manage the issues of the legitimacy of that? Because critics are always going to push back and say, well, who are you to decide what is material, what is something that we should focus on?
Absolutely. And the first thing I'd say to those critics is that other than the cash figure in financial accounts, I don't believe any of the other numbers as point
Mm.
estimates. So
Okay.
so that's the first thing to realize, is that the profit and loss figure is constructed through a series of politically determined rules. And
Yes.
so it's actually, much more softer than you might imagine.
Yes.
I apologise to all accountants who believe in accounting, and maybe that's our best trick, is we've made people
Yeah.
believe for numbers, which
Right.
is maybe that's a whole different conversation.
Mhm.
So everything is kind of contested, and
Mhm.
then I think what you're looking at then is, what is the baseline for expectations.
Mhm.
And so, because we've got a sort of a climate first approach at the moment, and people are trying to reach goals that are consistent with the Paris Agreement, that's an internationally determined agreement. It's not something that's plucked out of the air.
Mhm.
And I think one of the things that it's really important to realize, if you think the Paris Agreement is a bit tough, well, the state of Saudi Arabia signed it off.
Yeah.
So the sustainable development goals, they're in the same position. And
Right.
then the sort of the third big one of the moment, because it got signed a couple of years ago, is in around biodiversity. So there is international agreement about the things that we ought to be addressing.
Right.
Those international agreements are underpinned by scientific evidence. Now, of course, knowing how an organization interacts with biodiversity, and are they drawing down too much, now that's really complicated.
Mhm.
But if you like, the sense of purpose is not complicated. And the SDGs, one of the great success of them is that they kind of give us that sense of purpose in a really, grabbable way. On the social side, and I'm really pleased you asked about the social side. I didn't realize we'd go down this weed cul-de-sac, but it's an enlightenment cul-de-sac. So I think it
Yeah.
fits well with the theme
Mhm.
of your podcast. So the Enlightenment thinkers really talked about, well, what's the deal between society and the state, the social contract? So, what do we give up in order to be, adhering to rules? Because some of them were quite libertarian in their
Mhm.
outlook,
Mhm.
and then what do we get in return?
Mhm.
And so, this idea of a social contract, I think, probably from pure political philosophy, incorrectly, has been transferred across to ask, well, what's the deal for organisations? And so companies get legal personhood, they get protections of limited liability, all of those sorts of things. Well, what do we expect of them from society? And we expect at least they don't break the law when it
Right.
comes to social requirements, and environmental and economic requirements as well. And then over time, if you like, more things have been added to that social contract, and what we might anticipate organisations would do. And the difficulty with that is that then you're into that row. Okay, well that's too big of a stretch, and this is not enough, etc., etc. So the social contract, I think, is a really powerful idea and quite helpful, but I don't think it takes us where we need to be now. So it was constructed at a time when the world wasn't at its environmental limits,
Yep.
that we hadn't emitted so much greenhouse gases, that we're sitting on a climatic tipping point. And so a different kind of framing that comes from the same political philosophy. So these are post-Rawlsian.
Yeah.
John Rawls would be somebody who'd
Yeah.
be really well known for thinking about social contract in the modern age. They look at capabilities to flourish.
Mm.
And this, if you like, is much more like the Sustainable Development Goals. And particularly on the social side, it says, well, we know what human rights we've signed up to. So the International Declaration on Human Rights make it really clear that these base rights exist. So if you're an economic organization, you should not be impinging on those base rights. And certainly the business and human rights guiding principles encapsulate that. They are not binding law. They're not hard law for each country, but it's something that all countries have signed up to and organizations adhere to. So I think we know what the minimum is, and it's about doing no harm. If you have forced labor or modern slavery or child labor in your supply chain or in your own activities, you're not meeting the social minimum.
No.
If you are displacing people, or if you are using the security forces of a country in order to enforce your economic rights and move people off their land, you're not on the minimum.
Yeah.
So I really like the capabilities to flourish framework, because it allows us, particularly in the social domain, to identify rights holders and whether or not their rights have been impinged. And for that, materiality is not a consideration, because I only killed 2 people out of 200.
Yeah.
That's
Yeah.
it's a small percentage. It's still
Yeah.
material.
That's right.
plus one is material. And so you're into a conversation about salience. So how salient is this? And for that, it's 100% salience. So I think in some ways, because the social contract idea has done really a good job and has actually caused us to think about organizations in a particular way, we may be stretching it beyond its original purpose and its ability to deal with where we find ourselves now, which is up against environmental limits, um, extractive and really poor outcomes for a lot of people in this world. And also at the same time, our businesses have globalized, and so they're everywhere in the world but being controlled from a head office. So that's a really particular governance problem that we're inventing ways to cope with, which I'll talk about later on. So in that respect, I think, of course it's politics, everything's politics. But actually, we've got some baselines and we've got some bedrocks that we have universally agreed, and
So,
we can start from them and go on.
Yeah. So just on the so sitting here in Panmure House, Adam Smith is behind me. He's looking over my shoulder to keep me in check. But the interesting part of at least the Enlightenment here in Scotland is that when we think of their view of the social contract was not a group of people, men, sitting in a room deciding on this is how society should be structured. This is how government should be constructed. It wasn't this kind of deductive thing. Their view of contract or the social contract was that it was organic, it was contingent. Often it was by accident. They were shocked at all, that they had emerged out of feudalism, and then there was more kind of individual freedoms and economic freedoms, and they were kind of trying to figure out, well, where did this all come from? And it was clear to them that it didn't come from some group of people sitting in the room. Obviously, there's particular kind of political decisions that happened, but these are cumulative, they're contingent, and that was the Scots view of how social contract emerged. So when I think we think about what you just said, actually a social contract is much more flexible and should be flexible and should be, we should be able to shape it and into what the circumstances of our day require. I don't think, for those that like to portray the likes of Adam Smith as this is what he thought, I don't think he was a much more flexible and reasoned thinker. And if he were here, he would want to understand how has what is our current situation? What are the barriers to us to human flourishing generally, right?
Yeah.
So this is, I think, what we have to remember about the Scots. So let's move on to the specifics of organizations in relation to the United Nations Sustainable Development Goals. So there's, I keep forgetting how many goals are. I mean, this is the issue with the Sustainable Development Goals, is there's so many of them.
Well, only 17, Adam. You can count to 17.
I can count to 17.
Come along, you'll be fine.
17, and then how many? 187 points or something like that. So that's right. I forget the big number. But how can sustainability accounting in the main, what you've presented, how does that help organizations achieve or be part of the SDGs? And as a follow-up to that, how do we prevent cherry picking, right? So you see organizations that will say like, oh, look, we're achieving SDG. I can't remember the exact one for employment, or because, well, we have employees, we create jobs. It's like, well, okay, businesses create jobs. There's sort of some of the obvious ones that are like, you don't get credit for doing the basics. How do we kind of push them to do other additional parts of the SDGs?
Yeah, and when I wrote on my wee piece of paper here, not pick and mix. So
yes,
I'm with you on that one. So if we backtrack a little bit, so the Sustainable Development Goals are an intergovernmental agenda. So it was agreed by governments, and then all of those many targets are the targets that are on governments. Of course, if a government decides it's doing X, and if it's appropriate, it flows through to organisations. So some of the things that we're working with now as organisations have some of their birth in the Sustainable Development Goals. So modern slavery reporting, tracking due diligence for forced labour in your supply chains. They all come from SDG number 8, which is decent work. It has economic growth in there as well. So the SDGs are sort of split, I think, into 3 parts. The first few are about human development and flourishing. So it's about zero hunger, good jobs, equitable jobs, clean water and sanitation. So in some ways, unless that's your business line, those SDGs are a bit further from your immediate activities, but if you're paying appropriately and procuring appropriately and working well in local communities, especially poorer communities, then you might have a supporting role to play in them, or at least not a role that undermines them. So that's sort of, if you like, a bit further off. Then I'm going to leave the middle bits alone for the moment, because then the later goals, which really starts from 13, which is climate action, and goes climate action, life below the water, life on land. These ones are about operating with ecological integrity. And depending on where you are and what you do, some of that need for integrity will be translated into environmental permits, environmental regulations, etc., etc. And so, if you like, they've captured it there. So you've got the sort of the one planet living kind of thing. Then you've got the socially just. The things in the middle are where businesses come in, and they're tricky, but they're really quite exciting SDGs, but they are the composite ones. So things like sustainable cities and communities. That's a whole set of many different kinds of organizations and different kinds of groups. Responsible consumption and production is one that, if you like, gets used quite a bit. But obviously, even responsible production and consumption basically goes up onto the top line. On the human stuff comes down to the ecological stuff. So the key with the SDGs is that we want to achieve all of those things simultaneously and together. So it's definitely not pick and mix. But of course, our economic system doesn't achieve all of those things together, which is why they're new targets. And so we're in this really tricky position of that if you maybe improve one, you might make another one worse. So you've got to look for synergies, for crossovers, for how you redesign something so that it all works together. And of course, you do that in a system which is non-linear and is in a state of change. And I think the really difficult thing for organizations who are taking this seriously is you're trying to be sustainable in an unsustainable system. So our economic system is not one that's geared towards enhancing sustainable development. So in some ways, you have to then be changing that as you go. And I sometimes think of it as trying to change a wheel on your car whilst you're still driving on the motorway. And so it's not easy. And you improve a bit. There's some good things that come from it, some bad things. You go and you sort them out. So there's not a single fix. It's just this constant battle and firefighting to try to make the whole system work well. A really good example of one of the tensions right at the heart of this whole thing is economic growth. So our current system needs increasing levels of economic growth in order not to sort of falter and fall. And from the financial crisis to the post-COVID problems or whatever, we can see what happens when economic growth falls out of a system. But at the same time, the economic growth that we have at the moment, unless it's radically decarbonized and dematerialized, is driving us further towards environmental problems. So I think, and this is where your podcast is a really interesting one. So the nature and pursuit of economic growth, and do we all get to pursue economic growth, or do only some parts of the world get to pursue economic growth? Is I think a huge political question. But our international financial system is built on it being there and it being 2, 3, 4% a year. That is like the worst position in if you're trying to get all of the SDGs in together. So I think that whole conversation about, and it's sort of beyond my ambit as an accountant, but your listeners and economists and all sorts of people listening to this podcast will have a view about how do we transform that engine of what we're doing economically in a way that generates socially just outcomes, environmentally sound outcomes, and actually produces those goods and services that are important for human flourishing and well-being.
So I'm going to ask you a hard question. Do we know what a real sustainable economy would look like. And if I can preface that with, thinking about, you kind of mentioned economic growth, and, the degrowth movement is very clear, radical, a very radical shift in and how we live. But often I think it's quite ideal because I don't think it's feasible politically. It's often a view from the comforts of, the advanced economies of Northwest Europe. The view from Berlin is quite nice, but the view from, Lagos, Nigeria is, well, we need we need growth. We need, we have poverty reduction. But likewise, if you go east into Germany, more, where Berlin is, there's a lot of people that are, haven't seen their lives improved. And so they want growth, right? So it's this, we kind of look at the world from north to south, but even within the rich world, there's still those that want. And so how do you make it more equitable? But on that though, I'm still curious, do we know exactly what sustainability looks like? And again, it's not to say that we know what, climate change at 4 degrees average increase probably is going to be pretty bad, right? We know what polluted water looks like. We know what it means to live in a society that has low crime and high happiness and, things like this. We have that, but do we really know, is there an endpoint that we can look towards beyond an ideal, something that's real?
I think ultimately the endpoint is unknowable. But we can clumsily, in a good way, navigate towards it in terms of sort of the direction of travel, or kind of like a vector where you might want to go is kind of understandable. And sometimes we know what unsustainable definitely looks like. And it's not much fun sort of backing away from disaster as opposed to, walking towards something which is appealing and understandable, but actually backing away from disaster is maybe also required in some ways as well. So I don't think we do know. But what we know is that now I'm going to sound like I'm going to get out the guitar and start singing
Sure.
along.
There we
Is
go.
that we know if we work together, we'll get there more easily than if we don't. And so this is why, number 16 and 17 for the SDGs are actually really kind of important. One's peace, justice, and strong institutions, and the other one is partnership for the goals. So in that respect, everyone maybe has a wee piece of the puzzle, and they need to bring it together. Some pieces of the puzzle that we know about. Environmental externalities, if are persistent, have to internalize. So, need carbon taxes or, permits or regulation or some kind of control on those activities. We know that some of the distributional effects of unfettered economic growth that only goes to a few people actually destabilizes. So no matter what you think about if that's good or bad, do you want to destabilize global order or not?
Yeah.
And of course, we always feel that the current time we're living in feels more scary than any other current time. But the current time is, it's quite a volatile place. And if you put maybe, climate breakdown into that, it will get more volatile again. So we know that distributionally, we need to think more carefully about how we do that. So I think there's those sorts of principles we know about, and then over time we see, if you like, regulations, expectations, things put forward by industry associations. I love industry associations because they can collectively provide a view of an industry and help everyone move along together and in a good way. So we know a lot of that stuff, but putting it together, it's a mad task. It's sometimes described as a wicked question. That is, if anyone says I know the answer, I don't trust them because I don't think anyone knows the answer. So it's hugely complex, but actors of good faith who are ready to innovate, to experiment, to work with others, to learn together and take some of these key principles, we can make it less worse. And making something less worse doesn't sound as much fun as making it perfect, but maybe less worse is what we've got on offer to us presently. So
if we think of what drives capitalism, it's profit. At least, that's what we think drives capitalism. I'm not assuming that there's going to be an alternative economic system that's going to replace capitalism anytime soon. Nor do I think other alternatives that we've tried in the past are necessarily more sustainable from an environmental, less let alone a social perspective. Though that's to be debated. But how do you see, because again, always the concern is that, well, if we do this, it's going to cost us, that's going to drive down our profits, and then we're going to go out of business. And, so that's the perennial kind of concern. And then, and then if you overregulate or regulate companies or tax them, then they will threaten to leave and go to the least common denominator jurisdiction. I mean, these are the kind of classic arguments that come up. But how do you see profitability? And are the costs, let me rephrase the question, are the costs of addressing many of these problems, say climate change in particular, are they as massive as some people like to think they are?
I think profit, again, we're on to one of those funny concepts, aren't we?
Yeah.
So profit is a measure.
Yeah.
Okay. Sufficient profit is a judgment. Okay.
Right.
So if you wanted to, run a business and make as much profit, or definitely probably cash rather than profit, make as much cash as you can in as short a time as you possibly can, then if you like, that's if that was your business purpose, then maybe that's where you end up. But for many, many companies and organizations, their purpose is much more nuanced than that. So it's making a return, so that the owners of your organizations can live quite often, really modest lives that maybe, very normal, sensible lives. And thereafter, maximizing is not really on the agenda. So I don't think we need to maximize profits. From a strict economic theory perspective, maybe this is a good thing, but my observation of many organizations is they don't. And that's either because they can't figure out how to. So if you're a large multinational, it's quite hard to know how you maximize profits, because that's a really difficult coordination job. But we know that the bulk of our economy across the world are small and medium-sized enterprises, a huge percentage of family-owned enterprises. These organizations aren't being conditioned by stock markets or whatever. These organizations have choices, and they make choices. So we can see organizations who are socially responsible, who invest in their people, and even if you're on the stock market, you can do that as well. So I think everyone's trying to maximize profits is a bit of a totem. I don't know if that's the case. In fact, I can observe it's not the case in many instances. So in some ways, we're actually almost sort of curling back round to some of the SDGs. So what does a good living look like? What does a life that has you have all the money in the world, but if you're not happy, I'm not sure that really helps you, kind of thing. So that whole idea of a right kind of life, flourishing, what people would like. And so in that respect, I think that I think it's a bit of a red herring to say we just have to maximize out. Now, that's not to say there aren't costs in the transition. So the transition from one form of energy to another will incur costs. And of course, they incurred costs at the outset. So there's enormous subsidies for fossil fuels that comes maybe historically to play. And that was necessary for companies to be able to de-risk and actually acquire fossil fuels for the greater economic system. Likewise, nuclear energy. Well, there still is a lot of sort of backstop investment in there as well. Wind energy, solar, when we kicked off, it needed help. It's now cheaper than the others, so it doesn't now need help. So there's a sense in which, in the transition, you may share costs with government, and then innovation, change, design, all of those things brings things into a different cost profile. So I think in a snapshot, you'd say, oh, yeah, that costs too much. But in 20 years' time, will it cost too much? And then, of course, there's the whole thing, well, if you don't do it, what's the cost? And I think that's like the absolute brilliance of Lord Stern's review on climate change, which was now many, many years ago. His brilliance was to say, okay, inaction also incurs costs. So I think there's costs everywhere. It's how you choose to time them, who you might share some of those costs with, and then what does it get you at the end of the day? And if you don't do it, what costs are you storing up? So cost is it's a good argument.
In any kind of transition, there's innovation is involved.
Yeah.
And innovations, if they do really well, there's increasing returns. And so, what's going to be the next technology? And you can that if you get in on that, you can maximize your profits and make lots of. So it's important to stress that yes, there are costs to it, but there's also more and more, and you hear this more from investors as well, as that they started to realize, oh, there are opportunities with the transition. There's an opportunities with, making cities more livable and cleaner. And everybody assumes that, if we account for all of the that if we have to change our system, we have to invest in this, we're not going to earn a return. But actually, there's still quite a bit of opportunity to I don't want to say maximize profit, but make a lot of profit on the transition, which will cancel out some of the costs.
Yeah.
For sure.
And here I feel a bit of a weakling in a way, because I follow the let's bust up capitalism, some of those movements, and I absolutely see the point and the frustration and the passion that those communities have. I'm by no means I'm a bit wibbly wobbly, I suppose, in that. So I think, but I can see costs of that as well, and so I'm kind of like confused and somewhere in the middle. But I do know, as a scholar and as an accountant, I can maybe help modify some things. Now, some people find that very annoying because you prolong the life of capitalism, and so I absolutely get that. But everyone has to sort of find their own groove, and my that's not my groove. I don't think I'm naturally radical. But I think their argumentation within the public discourse is really, really important. Even if I don't agree with everything they say, it's important it's there. Kind of like, the kind of, the challenge and the opening up of the conversation space is really, really important.
For me, I think diverse views are important. And I think, and from all directions, right? So, I think it's good that there are groups that are thinking differently or want to think differently about alternatives and that push the conversation in particular directions. I think they can unfortunately do things in ways that stifle debate and have political consequences, like killing literature festivals here in Britain. But that's another
very topical.
That's a very topical thing, but I won't go into that. But again, they can stifle speech in a very illiberal way, or increasingly, at least in the U.S., the pushback against ESG from some states' attorneys general. On the one hand, you look at the pushback against ESG as, well, it's good that we're having debate about what are these financial products, what's the content, and so you can look at it as progressive in the sense that it's asking the financial services industry to really kind of, what are you selling, and is it viable, and because there's a lot of greenwashing, or there's a lot of kind of, they're doing this to charge a premium to their clients, and so I think it's right for anyone to kind of push back as part of a healthy society. But then on the other end, you see, for example, some attorneys general, I think in Texas, saying, well, to the pension fund, saying you can't invest in these 10 asset managers because these 10 asset managers have said they believe in, they want to move to net zero and they don't want to invest in fossil fuels. And you think, well, wait a minute. On the one hand, I was with you when you said you wanted to kind of have a debate about ESG and sustainable finance. I'm with you on that. It's important that we discuss. But then all of a sudden, you've become incredibly illiberal and anti-free market, right? So this is, again, they're supposed to be the free market types, and then they're actually completely illiberal, completely against free markets, telling proscribing investment in a particular asset manager because they have said they're interested in in decreasing their fossil fuel investment. It is absurd. And so again, it goes on. This is why for me, it's about how do we create a debate. This is I'm happy to talk to all sides because again, it forces us to define. It goes back to the social contract. What do we as a society want? What do we need? How can we all flourish? And these are the things that, this guy behind me, Adam Smith, they were thinking about, right? And he's not an ideologue like people often portray him to be.
And there's a really, really nifty idea, and I think Adam would have liked it. I'd love to do time travel and actually bring Adam to us rather than to go to him.
Yes.
Kind of thing. And this is I was introduced to this by a colleague of mine, Nick Barter, who's at Griffiths Business School in Australia, and that's future normal. So
Right.
there is going to be a future normal at which we will look back at some of the things we've done now and be astonished.
Yeah.
And I think a really good example of future normal is that a really amazing radio interview I heard of a very old man who was a young man on the whaling fleet, and he was heartbroken at what had happened to the whales population of the world, and that he was involved in it. And he was articulating in this interview, he said, if you had seen how many there were, you would have never believed you could even make a dent on that population. But
Right.
of course they did. So I think there's things like learning from the past about things if we had our time again we wouldn't do.
Right.
But then also to think about things that look odd now, maybe exactly what we need in a 4-degree warmed world. And so I think that also takes some of the, well, you're crazy or I'm crazy or somebody's crazy in here out of it, and to say, what will future normal look like? And I think that's a really smart way of opening up the conversation. So future normal won't be that it's fine to pollute in local communities.
No.
Future normal won't mean it's okay to land grab in order to further profits. So there's a bunch of stuff we know won't be normal in the future. And so that gives us a wee bit of an insight as well.
We should be thinking of the future. So moving on, what do you think the biggest challenge, what are the biggest challenges facing organizations today in terms of integrating sustainability into their financial and operational practices?
I thought there were three things that really struck me come to mind. Firstly, is having to make plans and decisions in an ecological context that is now non-linear. So the world has always been non-linear, but for broadly speaking, because we weren't up against environmental limits, we didn't see that non-linearity. So if you are relying on, and this is where accounting not just for your impacts, but also your dependencies become important. So say you're an agricultural company and you want to rely on coffee, and it's a long lead time to plant coffee plantations and to bring them through to productive use. You now need to figure out in a non-linear system what climate change and other biodiversity changes will do to that place where you think you're going to plant your coffee. So it's non-linear, it's complex, and it's in a state of change. And you can get probabilities, but you can't get certainty in that. So I think that's one of the really big difficult things. The second thing that I think is really hard for organizations is that this expectation about what they might be responsible for is now straightforwardly right down their supply chains. So whereas before you maybe said, well, I'm operating here, but if there's bad things 2 or 3 steps off, people are interested in that, and you might be held responsible and accountable for that. So all the due diligence and supply chain acts, the modern slavery disclosure acts, all of those are asking about what are you doing and what's happening in your supply chain. So the challenge there for business is traceability. So to know where your supply chain is. And those supply chains have often been designed for minimum costs or ease or whatever. They've not been designed to say, and what's happening at the far end of a supply chain. So I think that's something that organizations have been grappling with for a bit, but it's now becoming more statutory and regulatory. The third thing then, I think, and this is where the European Union is really interesting, but it's not the only country that does this, is that people who are managing markets, and the EU is managing a big market, they are starting to put import bans on materials entering that market that have certain characteristics. So one of the characteristics that's going to be forthcoming is that if you have a commodity, and they've got 6 on their list at the moment, but I guess they would add more. If you've got a commodity and it's associated with deforestation, so off to the supply chain again, then you can't import it into the EU common market. Now, everyone's like kind of shocked by that, but it's not unusual. So the state of California has had one prohibition for goods made with forced labor, which they put a lot of work behind, and you can be banned from selling goods in the US and California for that reason. So, but these import bans, if you like, are using local regulation because it's regulating EU borders, but then that has transnational effects. So that I think is a novel piece of governance. It is becoming the norm in other places as well, but also that creates enormous complexity for organizations because of that traceability thing. You need to know what's going on, and you can lose your markets as a result of it. And I know the EU policy, well, I don't know EU policymakers, but I'm led to understand that the EU policy impetus behind that is to make sure that they don't have a high cost sort of green, island, but rather the things that they are innovating with go elsewhere. And they are an entrepreneur when it comes to policy. So there's something called the EU taxonomy, which describes what's green and what's not green for a whole range of purposes. That's been replicated elsewhere in the world. So in that respect, if you like, these kind of approaches that you can't sell your goods unless you've got the certain characteristics are going to become, I think, more commonplace. So if you were you're really into free trade, you'd say a new form of protectionism, but at the
That
same
was going to
time,
be my
you say,
question.
at the same time, you say, well, this is my state, I can do what I like in it. So you've got that whole sort of tension between state sovereignty, that you get to choose what, as a government of a place, you get to choose what that might be, but also that connected internationally then throws up these difficulties to keep state sovereignty when you've got international supply chains, for example. So I think that's if you like the working out of the moment of this transnational production system against states' desires to achieve certain outcomes, and how we negotiate those deals between those two impetuses, which are pulling in opposite directions.
Right. I mean, I was going to ask you about the to play devil's advocate and say, is that not just a form of because non-tariff barriers have always been a kind of an issue around trade agreements and free trade among economies, and so I guess how is it? What is the work that then needs to be done to ensure that this isn't trade destroying, if you know what I mean? Like is the EU doing enough work to ensure that it's, I mean, I understand the Brussels effect or like the California effect in terms of shaping regulations in other countries or other jurisdictions, but then how do we ensure, because again, there are benefits to trade. There are benefits to being interconnected and interdependent from also a political and a security perspective, right? We don't want to shut off other parts of the world. But then how do we prevent those? And this is, I guess, a bigger question, that is, how do we prevent the integration of sustainability and shaping this to that it's not just about, we're protecting, French farmers, or we're protecting German industry, because this is the arguments that will come up. And I think what can be done to sort of assuage that concern.
And you need a different guest than me to answer that question. Okay. But Adam, I would listen to that podcast.
Okay, there's a good one.
So I don't think that's a complete cop out.
No, it's fine.
But I think your questions are absolutely spot on. And I was a humble accountant. I just do the numbers.
You just do the numbers. There we go.
No, I think it's a really important question because those. And this is where clumsy solutions are important. So there will be dysfunctional effects from that. Then you need to identify and fix them. Then there'll be other dysfunctional effects from that. So you need to identify and fix them. So it's not a like, woohoo, we've sussed it now. It's an ongoing thing. And I think,
But I guess
I'd love to hear the answer.
No, I mean, perhaps the answer is, again, it's about, we're trying to shape sustainability elsewhere as well. And so, if we have supply chains that don't use child labor in Bangladesh, is that not good, welfare benefiting of developing economies like Bangladesh that shouldn't have child labor. They should be going to school because it's benefits. I'm just throwing out Bangladesh as an example,
but then it's non-exploitative child labor. So child labor in the context of family enterprises where people are still getting education. Some of the things that I did on the farm, even at the time, I kind of knew they were illegal. I've been driving big trucks since the age of 6. My dad used to put a brick on the accelerator, and I used to kneel on the seat. I remember the wheels being this big. I mean, it was illegal then. It's illegal now. That is exploitative and dangerous child labor. So it's non-exploitative.
But that must have been really fun, though, right? Driving the tractor as a 6-year-old.
I just saw I was the most grown-up person on the planet, and I loved helping my dad. But looking back on it, you think, oh, really?
I mean, this is the thing is, my grandfather grew up on a farm in rural Arkansas, and I mean, you listen to the stories, and from the age of 4 or 5, it's like, that's why they had kids, so they could push them out and work in the fields and stuff. It's like, oh, you're supposed to go to school. Well, actually, it's harvest. So so I think in
we have some lovely remnants of that, particularly in Scotland. So like the tatty holidays, because it was a time when youngsters could help with the harvest. So it's the world keeps on changing, eh?
Right. So we have to kind of wrap things up here, and I want to ask you, looking forward, what advancements or trends do you foresee in the field of sustainability accounting? And how do you think these will shape the future practices of businesses and their impact on the environment and society generally?
So I think, remember I said at the outset that you had social accounting, then you had environmental accounting, and I guess that merges together in sustainability accounting. I think the future for accounting needs to almost go back to the past. So in the past we had, traditional accounting, then we had social, then we had environmental. All of that I now think is accounting. So accounting, if you like, encompasses all of these things, and it goes into the mainstream business and accounting function. The second thing is that I think we've seen that in reporting as well. So certainly in the very, very early days, the early 1990s, when the first environmental reports were generated, they were generated by operational units, quite often from recently privatized industries, where their environmental managers, they've sort of said this to me, saying, well, we used to pollute for public benefit, but now we're polluting for private benefit, so we need to be transparent about what the public disbenefit is from our activities. And as a result, if you like, they had quite an operational field. Then people started reading them. They started to think they're relevant. So they then get passed over to corporate relations, and then investors start to care. So it got passed over to investor relations. So I think in some ways, if you like, that sort of side journey of corporate reporting is going to come back into the reports that a company produces about itself. That includes financial and non-financial information that will help decision makers really understand what's going on and what they're, how to act on their preferences. So I think that mainstreaming will come through. Now, of course, there's been enormous rows about that. So the International Financial Reporting Council have set up a sustainability reporting board, and people are saying, hands off our sustainability reporting. But actually, I think that's what comes when it goes mainstream, as you get them in there. The second big thing then is how on earth are we going to reliably and robustly provide audit and assurance around the data that is produced? Because the data is of a very different quality and a different type. I mean, you spoke about this earlier in the podcast. CO2, that you can measure that. I mean, there's rules and there's a bit of leeway, but you can measure it. Biodiversity impact. So that whole audit and assurance will become more complex. And I guess one of the worries I have is that if the auditors and the assurers can't get a really good grip on what good financial, non-financial reporting looks like, they will say, well, you can't disclose it. So we'll actually have a pulling in of data rather than an opening out of data. So I think that's sort of, in the play there. So I think those, for accounting and accountants, those would be the two big things. For people who use the accounting, then I think it is going to be things like, the changing domains of responsibility going further out. could you construct a portfolio in a world where you've got systemic climate change risk that isn't risky? I don't know much about portfolio analysis, but I think the answer to that's no. So the systemic risk that everyone faces and can't be diversified away, I think that's going to increasingly become, sort of tricky for people. And this is maybe the huge contribution that Mark Carney made to some of our thinking around this in his speech on the tragedy of the horizon, is that this risk is systemic. It is going to climate risk and climate impacts are going to undermine economic resilience and stability, and therefore we need to think of it as market regulators, central bankers, etc. So I think that systemic element would be the third one, and I'm sure there's many others, but I think that's tough enough for anyone to get a grip on those three things.
And do you worry though that in this world of with accounting, the scope of what is accounted for and what the accounting profession and the sustainability managers and are we at risk just creating an overly complex accounting system to account for these problems that then leads to more confusion rather than actual effective decision making? I mean, how do we manage that tension, that potentiality?
And I think in some ways it's sort of like, be careful what you wish for. So when reporting was voluntary, people say, well, I don't have to do it because it's not mandatory. Now it's mandatory. So okay, if you'd done it at a size and scale that worked for you, you might not have been in this position. So we are where we are. I think a lot of people are spending too much time. I mean, do read the guidance, but spending too much time trying to pick out, what exactly does that mean? Whereas, say you're in the highways business and you're running highways, then actually, it's safety. It's about encouraging mode changes, so people get mobility but with less carbon. You know that you've got an amazing sort of ecological reserve on each side of your motorways that could be used to really lift biodiversity gain, not for the motorways but for neighbours out the other side. So I think some people are overthinking it and trying to read the detail of the regulation and say, oh God, what should I do here? Rather than saying, my business, how do I comply with the spirit of this for my business? And then going back and making sure that you have checked against the regulations. So I would start with the thinking of, for my business, what does this mean? And this is where the Sustainable Development Goals as a thinking tool are really helpful. Figure it out, then cross-check with the legislation. If you start with the legislation and get yourself tied up in there, the connection won't come through. So I think it's more strategic and top-down, but then check that you are in compliance.
Okay.
So spirit and the letter, put those two things together, but spirit first.
Spirit first. I like that. I think that's a good message to end on. It's focus on just the spirit, the purpose, and then check afterwards and not kind of check from the beginning and worry about the regulation. Thank you so much, Jan Bebbington, for being on the podcast, and I hope to have you on again in the future.
Look, Adam, just an absolute pleasure. And I know we've chatted at various, sort of do's in Edinburgh, but really nice to have a concentrated time to talk about, some big questions. Good questions.
Thank you so much, Jen.
Rightio.
You have been listening to the New Enlightenment podcast from Adam Smith's Panmure House. If you found this interesting, please consider subscribing and sharing. If you would like to learn more about Panmure House, please go to our website, panmurehouse.org. Thanks for listening, and until next time.